right, recording's rolling. Appreciate everybody that joined. Appreciate everybody that's here. Trying to get some direction for the week. We're going to be looking at, again, like I said, ETH, Bitcoin, XAU, US30. We're going to be looking at some back tests for US30. We're going to talk about the direction that we're looking for ETH and Bitcoin within our current range. And then we'll do some XAU, either back testing as well as directional analysis, understanding where we could possibly catch some trades coming into the middle of the week. So we do have a lot of news this week, a lot of volatility that's been going on. This is causing a lot of liquidity both ways, right? Both our side, on our sell side and buy side. So obviously we're going to do some analysis. We always start from the higher time frames, top-down analysis, see where we're at, see what's going on. So let's understand our daily chart here, our range that we have created from this high to this low here. We created supply. We didn't come back up and mitigate that supply. Instead, we just created new supply on this redistribution to the downside. If we notice, right, we came up here, came down, created a lower high, created another low, still held that lower high, and then we saw that continuation to the downside following, right? So this is how we can use market structure to figure out certain redistributions within certain areas. Now, we had that occur, right? We came down, created a range, started to accumulate. We saw the break of structure upside. We saw the demand liquidation, the creation of demand, and then we saw that move higher up into the range from that. We had a break of structure here, came up into these areas, broke structure as well, but we have still held this high that has caused this low, so we could still see that continuation to the downside, right? So looking at this daily chart right now, where we're at, the reason that I have these demand and supply zones here is going to be very important, right? So let's understand why I have them here and how I was able to figure them out. So if we see that we came up into premium of this range, right, and took out this buy side liquidity to the upside. So we took out early shorts that were in trades from here, 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 and so on, right? Trying to short this, take this to the downside from this large, right, impulsive move to the downside that we have created right here. Now we come up, take out the buy side liquidity. After that buy side liquidity is taken out, we see a couple moves, right? And then we see our displacement candle to the downside that broke structure from this low that caused this high. So this low that pushed price up into this area of buy side liquidity was immediately taken out, right? So what does this tell me? We've created some type of supply within this area, right? I always do the candle before the candle that broke structure with displacement. Gonna figure out a name, gonna figure out where I found that, and we'll get a better name for that than candle before candle, as that is a mouthful. But understanding that we came up into this area, right, broke structure to the downside, we have an area of supply for price to possibly come back into, to then either travel lower, right, into areas of demand that sponsored this breakout internally up within the range, or right, we leave this behind, leave this area of supply behind, start to accumulate, coming down lower into areas, right, of discount like we are currently in right now. And then from that, we will wait for a demand mitigation within these areas down here. I like the 1210 area from this break of structure to the upside. A lot of imbalance and institutional candle that we have down here as well as sell side liquidity. So we could see, right, price come up to these areas, start to come back down, accumulate, maybe even take those out, still hold this low, right, that caused the new high out of the range, take out that sell side liquidity, and then start to move higher. What's that going to do? Take all the longs out of trades and then get shorts into trades. Now, this is all unfeasible at this moment, so we're going to talk about our most recent structure, right, and what we are looking for. So on the daily, right, we saw the break of structure downside. Let's go ahead and go to our lower time frames. 12 hours showing us the same thing. Our break was right here from these lows that caused this high. We have a displacement candle area of supply as well. So we came down to this area of demand after we had liquidated these lows here, broke structure to the upside, and had that move up into that area of buy side liquidity. What had happened here? Came down into this area, started to accumulate, right? We saw the liquidation of the lows, mitigation of this institutional candle that had brought us higher up into the range. And then on our lower time frames, right, or not even higher time frames, our 8-hour chart, we saw that break of structure with an impulse to the upside. What does this tell me? That the daily can start to pull back, right? Obviously, we need to use our lower time frames to confirm the break of structure upside for the continuation higher up into these areas of supply, as we have also noticed buy side liquidity lying within here, right? So we're starting to see shorts getting comfortable within trades, trying to continuously take this to the downside, right? Obviously, the entire overall market structure is still bearish, right? But we're starting to show this internal demand that we are starting to create, right? So if we can come up to these areas from our internal structure that we have right here, I like this 1818 area. I'm going to be watching structure here For a possible pullback into this range, we just had an hourly break of structure as well, confirming a 4-hour higher low. Right here, we can see we had a drop-based drop into this area of imbalance that I have marked out right here. Once that had occurred, right, from this low to this high right here, we're looking for the continuation to the upside. I have an area of demand marked out. Let me go ahead and just delete this right now. From this break of structure to the upside, and we also have, right, this demand down here. We came in and filled part of this imbalance, but we have not mitigated this demand. That's completely fine. I have this area of sell side liquidity we could possibly come back down into, see something like this, right, where we take out the lows and then start to mitigate, continue higher. But I do like the way this demand is starting to set up now. I like this area for longs, this 1510 area, to take it up into either this area of supply. If we get a continuous break of structure displacement over these highs right here, I'll be looking for that area of supply overall. So internally, I am looking bullish, right, for areas to supply. And then once that is mitigated, we can take it lower. So after this has been shown, right, this break of structure to the upside from this high that caused a new low, we have this accumulation, creation of demand, push higher, reaccumulation up into this area of buy side liquidity, and then a large displacement to the downside. What is this doing? Getting everybody into short trades, right? We see this large displacement to the downside on the 4-hour, right, the 8-hour, and we say, okay, is that a break of structure? Obviously, we need to confirm that with our hourly time frame. So if I wanted to take this to the downside, right, within the hourly time frame, let's go ahead and take a look at this here. We have come up to this area, mitigated this area of supply that we can see right here from that displacement candle to the downside. This was that first introduction of supply, and then we had the large displacement to the downside that had occurred right here. Candle before that candle lies right here. We are currently within that supply. That was a great call by Casper on that short to the downside. We had seen this push up to the upside here, left areas of imbalance, but currently, right, we came up to this area of supply, broke structure to the downside right here, mitigating that certain candle before that candle that had broke that structure point to the downside, right? We'll look for now 5-minute structure break to the downside to confirm that entire bearish pullback into these areas of demand, and then I will sit here and watch. Probably set alerts at this 510 area, or it could come into this area of imbalance as well and start to show that push forward. But this is that hourly chart, right? So once this 15-minute flips bullish in these areas of demand, then I'm going to be looking for that continuation to the upside. Now, obviously, like I was saying before, we could come down, fill this imbalance as well, and then start to accumulate and move higher. What's that going to do? Get more people in shorts as price comes down to these areas, create more buy-side liquidity for our overall internal bullish trend that we have created here. So that was kind of ETH as far as what I'm looking for. I do want, or based off how a structure is currently looking, right, I could see something easily like this where we come into these areas, start to accumulate, come higher, take out the shorts, right, take out those early shorts. That's going to get everybody in longs within this trade. They see a trend line breakout, whatever it is, right, creation of sell side liquidity, and then we see a large move to the downside. Once the shorts are out, the longs are in their trades, right, that uninformed liquidity, we start to come down to areas lower that sponsored this entire move to the upside. One, we respect this and continue to the upside, or two, we take out these lows and then start to show some type of demand, right? Looking for something like this overall into this area of supply that had actually sponsored this break of structure to the downside, that actually sponsored this move to the downside. So taking out all shorts, right? This is going to get all the shorts out. And then one, we either mitigate this area of supply and then continue a bullish trend if we can break structure to the upside, right, with displacement. But that is way too early personally to call now. So I'm going to go ahead and do Bitcoin as well. We'll look at the current range we're in, why I'm looking for what I'm looking for. Let me just get rid of all of this. We'll understand what we are looking for within these areas. Go ahead and delete this as well. Apologies. All right, again, higher time frames to lower time frames. What are we looking for, right? This was, let's just draw the range from the low to the high that we have created right here, right? We are currently coming back down into discount within the range. We have sell side liquidity available as well as this monthly 17.5 sell side liquidity that I have placed right here. These monthly equal lows looking like a monthly drop based drop. Looks like it, right? We need to have the full confirmation to take this into those areas, those lows, right? We obviously have an imbalance here as well and a demand candle from a break of structure to the upside, overall lying around 14, 13K, right? So doesn't have to come down to those areas, right? But with structure that we have right now, with what we're looking for, we had a daily structure break to the downside. We talked about that area of supply. We created another drop-based drop into these areas. We're currently mitigating this institutional candle, this low that had caused this high out of the range. So this is where I would watch for demand creation, right? If we either take out these equal lows or, right, let's go to the lower time frames. Delete that. We either one, take out those equal lows or continue to hold this low that caused this internal high, right? But if I'm looking at this, the standpoint that I'm looking at it as is we came up to this area of supply, right? We saw that push up into those areas. What was the demand that had caused that push up into that area of supply? Right here, right? This reaccumulation that we saw, distribution to then accumulation was immediately broken to the downside with this supply creation right here on this move to the downside. So one, I'm looking for a return up into these areas, right, to mitigate this and continue downside. If we can continue that bullish structure that we have in place right here, if that is not shown, and instead we continue to push for the lows, I'm going to be looking for these 17.5K lows for that introduction of demand. We'll be looking for the quote-unquote spring, right? A liquidation of the lows and then a bullish engulfing candle to the upside to show us that that demand has been introduced, right? So we have our institutional candle here. We're looking for this low to be held. If it is not held, then I'm looking for the 17.5 liquidity that we have below here. So with that being said, right, Casper's obviously in a play right now. Looking at it, I think it was a 15-minute structure point that he had found after liquidation of the highs. Yes, we came up and mitigated this area, broke structure downside on the 15-minute. So he is either looking for these areas lower or looking for areas of demand for us to possibly reaccumulate into and then continue to the upside. But right now at 7:17 p.m. East, I'm not going to be entering any trades. My personal setup has not shown itself yet. When it does, entries and exits will be posted. So there's Bitcoin, there's ETH. Let's go to XAU, understand what XAU is doing. We'll do the back test later, but I want to just show what we are looking at right now for XAU. So very, very similar story as far as downside goes. Overall, we have this low to this high here on a weekly, monthly time frame that had caused a new high overall. We saw this move to the upside, liquidation rate of the lows, break a structure to the upside, this reaccumulation that caused that move to the upside. So now going to the weekly, right, we have our weekly range that was being created. We kept premium of the range, took out the highs, broke structure to the downside, had an accumulation to then distribution, that redistribution that had introduced more supply on this break of structure to the downside, whereas your candle before that candle that had broke these lows to the downside, right, with displacement, looking at weekly closures, right here, area of supply that we came up to and mitigated. And if we look at this as well, right, beautiful, beautiful equal lows that we have in place right before an unmitigated area. We have imbalance. Remember, this is a weekly chart, so this is a higher time frame that we are coming into. These lows down here, looking at the daily time frame now. Right, the daily candle before candle, if you want to do that refinement into those areas. Right, we had that break of structure to the downside. We had an accumulation to then distribution. There's two things that could possibly happen here. One, we continue to the downside, right? Slowly pushing to the downside with all of this buy side liquidity. Start to form that, come into those areas of lows, right? Mitigate demand, and then start to have some type of possible reversal. Right now, you can't call that, right? So I'm going to go ahead and look at our most current structure as far as where we can take some certain trades, right? So I had a short actually from these areas, trying to take it to these lows right now, but let's go ahead and look at where we could possibly get into one, right? So the daily time frame, we had come up into these areas, broke structure to the downside, right? We saw this move to the downside as well. Area of displacement, let's go ahead and go to our lower time frames. So from this low to this high, let's draw our range. All right, and we see that price had that accumulation to then distribution. Where was the reaccumulation that had sponsored this move to the upside, right? That sponsored that break of structure to the upside. Well, that lies right here within discount. So if I'm looking at a 4-hour, even an 8-hour time frame, right, from this impulsive candle to the upside that had broke these structure points, then I'm looking at this institutional candle, these areas right here. Right, you can see we're starting to come into those areas, creating lows. This is showing us one of two things, right? What I mean by this is when we come into these areas, we want to see that creation of buy-side liquidity. So we want to see equal highs. We want to see lows manipulated with wicks right to the downside on the higher time frames. Let's go ahead and take a look at the lower time frames from the 4-hour and then to the 1-hour. But currently, we had this breaker structure to the upside, an area of demand that was created from that. We can see this high right here was broken to the upside. What sponsored that? This move to the upside right here. So obviously, overall, we are still bearish, looking for that continuation to the downside into these 1670, 1660 lows. But we could see a possible return to supply that had caused the overall breakdown, right? And if that occurs, and going from a higher time frame, right, we could do the daily chart within this. If that occurs, right, we had our breaker structure to the downside right here. What sponsored that? This move right here. Right, so if we can come back into premium after mitigating this area of demand, starting to show 4-hour bullish structure, right, after liquidating lows, we show some type of 4-hour bullish structure that will confirm my daily pullback. And then once that starts to occur, we'll start to see that move higher up into the range. Taking out that buy-side liquidity up here at 1789, filling these fair value gaps, right, that had caused this move to the downside. What does this do? Get everybody into longs. Once that happens, we look for the breaker structure to the downside with displacement. Same exact behavior we are looking for over here. Once that occurs, comes up, makes a lower high, continuation to the downside, right, overall. Something very similar to this. If not, right, if this demand zone is violated with a drop-based drop or with a redistribution, right, then I'll look for this area of supply or a similar area of supply to continuously take this to the downside into these areas here. Now let's go ahead and understand dumb smart money too and what that means, right? So if we're looking at this and saying where is dumb smart money, where are they getting into, right? When I speak of dumb smart money, I speak of the traders who are looking at this over and over again, right? Higher low, higher high. We obviously talked about how we are looking at a different structure, right? Where we can accumulate, continue higher, reaccumulate, right? Move higher, start to distribute, right? Create the LPSY, continue to the downside, come down into these areas, accumulate, right? And see more of this type of structure than we do this higher high, higher low, higher high, higher low structure. This gets you in a mentality that is not very good. If I'm going to be personally honest, that's just what I believe, right? It's not a very good person or mentality to get into, because then you're going to be either one, left out of trades, or two, in certain situations to where you don't understand really what you're looking at and you're believing that you don't know where price is going to move next. You start to cause irrational or start to make irrational decisions, right? And then you start to lose money, and then it's that whole losing cycle that we're not looking at, or that we don't want to be trading. So understanding XAU, right, I am looking for some type of return into supply that had caused that breaker structure to the downside. If we can reaccumulate within these areas after taking lows, then I will look for that continuation into those highs. Like I said before, for Bitcoin and ETH, entries and exits will be posted. So now we're going to US30. I'm going to go ahead and get rid of all this TA, and we're going to see how we found this, why we found this, and what we are looking for, okay? So just delete all of this for you so we can go back and understand what we are looking at. So on our higher time frames, right, looking at a weekly chart, we had made a move up into these highs right here. We saw the weekly break of structure to the downside right here, return up into the candle before the candle that had caused that break of structure to the downside. Again, same exact scenario here, made another low, came up, still held the high that caused a new low. Where's your liquidity, right? To the downside. So we came to the downside, took that out, started to continuously break structure to the downside. Now, this is when I was very, very interested in this trade and interested in these areas, right? Because if we look on the weekly chart, we can see weekly equal highs as well as daily equal highs, right? Very, very clean equal highs that we have in place right here. So if I go ahead and put these back, show you where that was taken out, right, to the upside. Just right there, we can see that we took out that buy side liquidity, took out those early shorts, mitigated this fair value gap from this break of structure to the downside right here, this area of imbalance, right? And then from that, after all the shorts were taken out, after we broke structure to the downside internally on these areas, created supply, then we saw that final move to the downside. So looking at the daily time frame, we can see that accumulation to then distribution. What does this tell me? A possible redistribution is going to occur, right? So now let's go to a lower time frame, look about how we could have caught these areas, right? Caught these trades within this structure right here. So coming up into this area, taking out this buy side liquidity, let's go into the lower time frames now. We're going to do it with the candles on, and then we're going to run it replay mode. This is something that I personally recommend for anybody who is trying to back test, trying to get something and understand what is happening, right, when you're going back, because I get a lot of questions a lot of times. How do I back test? I don't want to see the charts after it's already happened, but personally, I do. Why do I want to, right? So then I know that what I'm looking at is right. So then I can go back after that replay mode, after my zones were hit, after my zones were respected, and then I can start to figure out those trades, figure out how I would get into. And then after I'm done with all of that, right, I'll move it to a live back testing scenario where I'll just back test it live, see where I could have possibly gotten into trades there. So we saw that move to the upside, right? Push up into buy side liquidity using the disapproval theory, using the continuation theory. I will show you exactly how we could have caught this trade to the downside right here, right? So understanding that we have made bullish structure, right, on this entire move up. Where's our areas of demand? I had this low to this high right here for an external range. Apologies. This one right here. For an external range that we have created. So we pushed up into this area of buy side liquidity. We have our range from our imbalance, right? Demand creation right here. Break of structure to the upside. If we look over at these highs right here, this impulsive candle had actually caused that move. That break of structure to the upside from this high that had caused this low right here, right? So we see that move to the upside into that buy side liquidity. Let's go to our lower time frames now, look how we could have caught this, or just understand how we could have done it on the 4-hour chart, right? So if I'm looking right here, I see another rally-based rally, right? Another area of reaccumulation that had pushed this price up into this high right here. So this is my candle before that candle that had pushed that price up. So what does that tell me? This is demand, right? If this demand is taken out, right, then I am disproved within my theory. I am no longer longing. Here we go, right? Let's put it down. Put down that demand. What happens? Large move into that, right? We see that violated almost immediately. You don't want closures into your zones. You do not want these closures like this into your zones whatsoever. You want to see price coming into it, wicking off of it, right? Picking up those orders. And then once that happens, you look for the break of structure for the demand and or supply introduction, and then from that you can look to enter the trade. But using the disapproval theory, right, we can see price came into here, wicked into here, and then showed this large move to the downside right here within this candle. Let's go to the hourly chart and understand what happened within that candle, or within this demand zone as well. Does this look like healthy demand to you? Not at all. I don't want to see this coming into these areas whatsoever. We see price come down and then violate that supply zone right there. So what does that tell me, right? That we have created supply. I've been disproved from my long, so I'm no longer taking this to the upside, right? Where is my supply? So we showed the 4-hour candle. We showed the violation of that candle, right? Where's your candle before the displacement candle following the liquidity raid? Where can we look to enter that, right? If this was the ICT entry or the fair value gap, right? That model, you could have entered on this move right here. But I'm looking at the candle before the candle that caused that displacement. Always this candle right here, right? That institutional candle that we had right here. Technically, this entire candle is the ICT order block, but I'm not here to teach those ICT methods. I'm here to teach these candle before candle methods, what I'm looking for, right? So if we look at it here, your 1-hour break of structure downside calls for your 4-hour pullback, right? Where's your 1-hour break of structure downside? We see that occurred from this move right here. So where did the hourly break structure to the upside? Here was your first break to the downside from a high that caused a new low, your displacement candle to the downside, right? And then where was demand taken out internally, right? We can see that we caused a low, a high, an internal higher low, and then an internal higher high right here. So this moved to the upside right here. So where was that broken? Where was that candle broken? Right here. to the downside. That demand creation that had pushed up into these highs right here. Where was that broken to the downside? Right here. If I go on lower time frames, a 15-minute time frame, which is actually what we're going to do, just so I can show you this so you guys don't get confused. Let's go to the 15-minute time frame, play this out. There's your low. Right, we can see that that low was formed right here within this area, this low. I just looked at that from an hourly candlesticks. That's why those wicks are very, very important to me up until the 4-hour chart, right? So let's look at this. We saw that break of structure to the downside, right, on that hourly candle. Price came back up into those areas after we came back down to this demand to mitigate that. So dumb smart money at this point does not see this mitigation or creation of supply, after we had taken out all the buy side liquidity. What do they see instead? Another higher low, because why? They're in that mentality like I was talking about before. Higher high, higher low, higher high, higher low. Let's continue, right? Are they looking for supply and demand? No, they're just looking for the continuation to the upside based off of structure. We still need to understand the narrative of where we can possibly get into certain trades. So we see this demand mitigation down here from this candle. We're looking for the creation, the mitigation of the supply back into these areas right here. Let's go ahead and play that out. Comes into that area of supply on the lower time frames. We're now looking for that 15-minute structure break to the downside, right? We came up into these areas. Here's the 15-minute structure break to the downside. We had a redistribution following as well, right? So we're looking for the continuation following. But you could wait for a more vibrant, right? A more, I would say, more clear break of structure to the downside with displacement, which is perfectly fine. Let's wait for that full breakout, right? So price comes back up into these areas, full breakdown. Where's the displacement? There we go. We have displacement that is being occurred, right? So let's go ahead and take a look back. Say, where could we possibly get into this? We see that this high was violated right here. What was it violated by? This move right here. We saw that that was broken to the downside right here. Where's your next area of demand? Right here. So let's play this out a little bit more. We have that displacement to the downside, right? That following displacement to the downside. If we look on a daily chart, we are looking at something similar. But within this redistribution, we can talk about how we could have gotten into trades from that break of structure to the downside that had occurred right here. Again, that same type of theory, now that we have switched bearish, right? What am I looking for? The disapproval theory. I'm going to keep shorting, right, until I am proven wrong with every supply zone that is given to me at this point in time. So again, that dumb smart money, right, that was getting into long trades to the upside right here, all that did was create fuel, create reason for price to come to the downside, right? That sell side liquidity that we had right here. What does that do? It's broken to the downside. Where is your candle before that candle that had broken this entire range, right? That area of supply. This is an hourly chart right here, right? I don't want to sit here and show you guys past price action like this because you could sit here and say, oh, it was already happened, right? How is this going? But again, like I was talking about with our back testing, this is how we will get into certain scenarios, start to get more comfortable and confident into what we're getting into. And then from that, we can get into more profitable trades. But looking at the 4-hour, right, we can see we had a break of structure to the downside right here. We can see we had another break of structure to the downside right here. Looking at the 8-hour, very, very similar story, right? We have an area of imbalance for price to possibly come back into and then mitigate that and then continue to the downside. So let's go ahead and watch it, see if it does just that, right? This area of fair value, this gap that we have right here, starts to come down lower into these areas of demand. What is this going to start to do? Start to create more sell side liquidity below. All right, let's go ahead and watch it out. We raid the highs right here. We start to come lower. We're starting to manipulate lows and leaving highs into areas of demand that we have right here. We see the move lower, and then we start to see this choppy price action. What does this tell me? That price is being pushed up by the algorithms, that they're trying to take this to the upside, right? So then they could get people out of short trades into long trades, create that sell side liquidity for then the continuation to the downside. So if we play this out, we see that push up from these areas right here. We'll talk about how we could have gotten into this. Let's go back. Let's understand where this was. Right, looking at this, we came up into this area, mitigated this area of supply, right, that drop-based drop that we had before, and then we left this high right here. So my range within this entire move right here is from this high to this low. So as long as we hold this high, right, we can still see that continuation to the downside, as this is your strong high, this is your weak low. Let's go ahead and play it out. At this point in time, looking at this chart, looking where we could have possibly got into trades after that push up, right? So we took out all the buy side liquidity within this trade. We're within an area of supply right now. Looking at our lower time frames, right, when we had come up into that area, let's look for the supply introduction after we rated the buy side liquidity, right? Where's that double break of structure? Where did the supply go? Where could we have gotten into trades at this point in time? So we see that this low right here caused this new high. This low was broke into the downside right here. We can look for the second, right, within these areas right here. So here's our first. Oh, I'm sorry, and then here is our second. From this low that we had created right here, where's your institutional candle, fractal supply? This low to this high right here. Why am I using this fractal supply? I can go to my lower time frames and we can see that institutional candle as well. Fair value gap that we had as well. Looking on the 15-minute, we can wait for that to cause some type of structure and then play that. So looking at this, right, we saw a move up into that. We saw the break of structure to the downside right here. Now that the 15-minute structure has broken downside, where is your next area of supply? Candle before displacement, candle that broke structure to the downside right here. Right, with your hive right there, we come up into that area, mitigate that area. You could have looked for trades and then taken it down to these areas lower. Why? Now that we have mitigated this area of supply, we are within premium. We have taken out all the early shorts and we have introduced supply. We can now take this trade to the downside. So it mitigates your area of supply, starts to move lower. And again, dumb smart money, what are they doing? They see this large move to the upside, right? And they say break a structure, break a structure, break a structure, right? Price broke right here, price broke right here, price broke all these highs, right? They're just marking everything out, trying to take this to the upside. And they're like, okay, my demand zone, my reaccumulation, right, is right here. So what do? They all enter, they all get into limit orders because they want to be right. They want to catch a bottom and they want to take this all the way up to these highs right here. Wherever they want to take it, maybe up into supply, whatever it is. They want to be right and they want to take this to the upside. We're looking at structure where certain prices were violated, and then we can look to get into trades that way. So we see that displacement candle to the downside. We filled the fair value gap as well, went into that area and then started to move lower. Right? And then what did we have happen after that? We see this move to the downside, this liquidation, right, to the downside, and then we see a break of structure to the upside. So what does that still tell me? It still tells me that we're still leaving lows, right? We can see these as well. We're still leaving equal lows within these areas. Price is being pushed up into possible areas higher, right? Let's look for where I could have possibly gotten into this at this point in time, right? We have our break of structure to the downside right here from the entire overall range that we have sponsored, right? This is where that break of structure occurred. Where is your candle before that candle that broke that structure point to the downside? Right here, right? So we could come up into these areas, take out the highs. Looks like we're creating more buy side liquidity as well, right? And then once that occurs, we can start to take this then to the downside. Okay. So let's look at this. Watch the structure as we come up into these areas. Watch where we possibly could have taken this to the downside. We also notice this fair value gap that was created from that break of structure to the downside. So we could come up into these areas, introduce that supply, right, and then continue to the downside. But I'm looking for price to come up into that area of supply. You also notice it is a drop-based drop. All right, so let's play it out. Comes right up into that area, takes out those highs, right? And then you have that move to the downside. How could I have gotten into this trade at this point in time? Well, now that you have all of your time frames, right, bearish up until this point where we get up to here, we look for the raid and then we look for the introduction. So let's go ahead and look for the raid, look for the introduction on those lower time frames, right? So again, here's our area of supply. We're looking for the rate of the highs and then the introduction of supply. Price starts to move higher, raids the highs. Where's the introduction of supply? Let's watch for the structure. Right, we see just a large break of structure to the downside. Let's still play it out. And then we see this move here. Let's bring this back. right? It's still bullish at this time, right? It's still showing me bullish structure. I don't have any displacement. I just have this move to the upside right here. It could come down. It could continue higher into supply. I want to look for where that displacement is, look for the candle before that candle, as I always do. And then once that is given, right, I'll take this to the downside. So we play this out. There's your displacement candle. Many, many breaks of structures, right? From all this reaccumulation, these areas of demand literally broken within 1 5-minute candle. Where's your candle before that candle? As always, right here. Where's my entry? Right here. Same exact thing. Stops over the high. Oh no, equal highs, right? But is that our structural narrative? No. Our structural narrative is bearish. So does it have to take these highs? It does not. And let's go ahead and watch what happens. Where's our next structural liquidity? To the downside right here that we had mentioned. Again, does it have to come raid these highs? No, it does not. Let's go ahead and watch it. Comes right back up into that area. Right back up into that candle before that candle. What happens? Delivery right to the sell side liquidity, right? So if we wait for that displacement to come into play, wait for that large footprint like we've been talking about, right? This large footprint, and we can throw the volume too just to show you the volume if it will allow me. Yep, we see the volume increasing as we come up into these areas. We see the volume increase on the break of structure to the downside, right? That tells me that algorithmic liquidity has entered the market and that I can look to enter after them, right? We're following the whales, following the big money, following the footprints, right? That's where that footprint is given, and then you are out with a 13 to 1. Beautiful, beautiful trade, holding to then the lows. Right, these are your next area of structural liquidity. Obviously, you could have held it to areas of demand right here if you wanted to take profit, right, at 10 to 1s, 9 to 1s, 7 to 1s. Very, very good trade still. But then this area lower right here. And then let's look overall. We'll just printed that 400 candle. But if where we could have looked to take this trade to next. So looking at this and saying on my daily chart, okay, right? We broke structure to the upside right here. It looks all taken care of on these moves to the upside right here. Where's our next reaccumulation? That push price higher, right? We can see this right here. We have a daily imbalance as well as an area of demand. So I'm just going to go ahead and use this entire consolidation to make it simple. But again, after that, we can now take it into those areas of demand overall. From that daily time frame, you don't have to sit here and snipe those exits right on the lows or anything like that. Personally, I'm going to take it to a higher time frame area of demand or supply if it is given based off of my R, right? Obviously, this is 35 R. I'm completely fine with that into these areas of demand. So we play it out. We drop right into those areas, right? And now we can see how the structure is starting to build up. We had a break of structure to the downside. Full range break to the downside right here. Creation of that drop base drop, right? That sponsored that move to the downside. We came, rated the highs, broke structure to the downside on the 5-minute with displacement. And then from that, we were able to get into that trade. How is this from a Wyckoff perspective? Same thing. Accumulation, manipulating lows, leaving the highs. Let's just show it out, visualize it. Right? Taking out the lows, low, 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 low. Right? And then we leave the highs. We take out the highs. What does this do? Get everybody into longs. They start to early long right here. They're taken out of their trades. We break structure, continue to the upside right here. What is this doing? Getting everybody in longs now. So now that they've gotten out of their shorts, they are starting to get in long trades. Where's that shown? Right here, right? Where are they going to put their stop losses? Where's the most external point within the market that they're going to place their stop losses because they don't want to be wrong, right? Where are they going to put that? Right here. At this external low right here. They're like, there's no way it can go past this, right? This is that mentality that we want to avoid when we are trading because we don't need to be right. We do not need to be right. I'm looking to be wrong so I can be disproved, one. And two, I understand, right, that if we can get up to the patience, especially with this high R&R, low win rate type of mentality, right, then I can lose 2 to 3 and then hit 1, make 10% on my account and be completely fine, right, for the week, for the month, whatever it is, however you are trading. But Understand that we come into these areas, take out those highs, and then break structure to the downside. I'm going to show you the same exact thing with XAU, why this certain trade was running at 188, but how we could have gotten into it, right? So we showed what we were looking for XAU overall, but I'm going to show how we could have entered this position that was shown right here on this move to the downside, how that occurred, what we were looking for. But at this point in time, let me just draw this back. We'll go into replay mode again, right, from here. Just looking at the mitigation, the continuation downside, creation of supply, so we can take this trade, right, continuously to the downside to these lows from that overall structural liquidity that we had talked about earlier within stream. All right, we come up to these highs right here. Let's look on the 4-hour chart. Watch the behavior. We get that 4-hour break of structure to the downside. Right at this point, right, we're looking for some type of continuation. I'm looking for the hourly to break structure to the downside as well now. So we can wait for the hourly. The hourly shows, right, a possible break of structure, still not yet. It's showing some type of creation of sell-side liquidity, possible accumulation to then distribution. If we still hold this high that caused, this high that caused this low right here, we can still see that continuation to the downside internally, right? So what do we see? We see a displacement candle to the downside, area of fair value that we could have looked to enter on this move right here, taking it lower. Now that your hourly is bearish as well, we can wait for the 15-minute now to also switch bearish after coming up into these areas of supply. Let's go ahead and watch it. We see a move right here. We see a push up into this high right here, and then I see a bearish engulfing candle. So now at this point in time, I'm looking on the 5-minute or lower time frames to see where I could have possibly gotten into this trade right here. So we saw a move to the upside right here. We saw this demand, and then we saw this demand broken. Right here to the downside. A lot of times people can get stuck in the, was it not a black candle, right? Or it has to be a black candle, or it has to be a demand candle or a reaccumulation. This is a reaccumulation. Let's go on lower time frames. There it is, right? It's not, it's there. This is why every candle is important. This is why I use the candle before the candle that broke that structure point, right? We saw the lows liquidated. We saw the high taken out right here. Whereas the candle before that candle that did that, right? Right here. So what sponsored that move for the first time? We have our institutional candle. Second is going to be that candle before the candle that then broke structure to the downside. So your introduction is going to come from this move right here. So let's play it out. We see that move right here. We still now have this area of supply that we could possibly come back up and mitigate, right? Still hold this high and continue to the downside. Let's watch it. Let's watch it play out. We raid the highs. We raid the highs. What happens after? Displacement candle to the downside, right? So how are we going to be able to get into trades at this point in time? All right, let's go ahead and take it back to our higher time frames and understand what happened within this area. We saw this area of fair value that we talked about before. We still held that area of fair value, so if you were on the higher time frames trying to take this to the downside, that would have been completely fine. But on the lower time frames, right, when we came up into these areas, now that we had that 5-minute structural shift, I'm waiting for my 1-minute structural shift, right? So once we run up into these highs, I'm looking on my lower time frames, on my 1-minute chart. Because again, now that I've rated the highs on my 5-minute time frame and broken structure on my 5-minute time frame and introduced supply, right, then I'm looking for now the 1-minute. So what am I looking for the 1-minute? Again, a liquidation raid, a creation of supply, and then a continuation from that, right? So let's go to the 1-minute. If it will allow us, hopefully it does. Yes, it does. Perfect. Wait for those highs to be rated, right? Like we had said before. Now where's the introduction within this? Let's go ahead and wait. So we have this move to the upside right here. Where is that candle area of reaccumulation that had shown from here? Let's just take this off not to confuse anybody. Again, highs rated. Let's wait for the minute. Let's wait for some structure to form. We take out a high right here. Where's your break of structure to the downside? At this low or this low right here, it's going to show that same exact displacement candle that we're going to look for anyway, breaking all the lows. There it is. There's your displacement candle. We can wait for another one to play out. There's that one. Let's wait for one more to play out. Now you have an area of supply you could possibly get into on this fair value gap up to this high of this supply right here. If we can come back and mitigate that. If not, that's okay. We'll wait for the lower time frames to show that same exact narrative. Next, where is your next high taken out from a high that caused a new low? This high caused this low right here. Saw this move right here, area of demand. I can disprove myself if we mitigate this, either come up to this high or mitigate this and break it, right? So let's go ahead and play it out. We end up breaking that, right? So now I can disprove myself and say, where could I have possibly gotten into trades on this move now? So now I see this break of structure to the downside. I have my next area of supply with an imbalance that price could come back up to, mitigate, and then continue to the downside. Let's just play it out. We end up breaking structure to the downside. We come back up into that mitigation of that candle that had broke that structure to the downside. Now we're looking for the full continuation, right? Now we are looking for the lows overall. So accumulation to then distribution, rating the highs, leaving the lows like we were talking about, right? So let's go ahead and take a look at this. Watch how this reacts off of this zone that we have marked right here from the candle before the candle that broke structure to the downside with displacement, as we are always looking for, right? We break structure to the downside even more. This gives you more ability, right, to now hold this trade 2 areas lower. Let's go ahead and take a look at this. Obviously, I want to hold into areas within discount. We have an area of demand as well. So now that I'm in my trade within this 1 minute candle that we have right here, let's just draw this out. Short position right here, targeting that area of demand overall. You can put your stops right here, stops over this high, completely up to you. How do you want to take this? Hold it down 2 areas of demand lower. Right, this is the thing with gold and a lot of forex pairs, right? You might sit there and say, well, it leaves me a lot, right? It's leaving me, my zones are being hit, whatever it is, right? It's because we create more. It's because we manipulate and we create more. So instead of getting into this mentality where it's demand zone, right? And then continuation higher, we're looking for the creation from time frame to time frame. So now that my 4 hour, right, had broken structure, I'm looking for the creation on the 1 hour. I'm looking for the creation then on the 15 minute. I'm looking for the creation then on the 5 minute, right? This is how I'm looking to get into trades and looking to take trades to certain areas. Obviously, overall, we now have the 4 hour to the 1 minute bearish, right? Where you're holding down to areas of demand overall. Within discount as well, from this low that had caused this high, right? You can start to see the narrative, start to see how it's coming together. Let's go ahead and take a look at this, how this reacted off of, and if we got the continuation from these areas. So let's play it out. We come up into these areas higher, right? We have another displacement from this move to the downside right here. If we're looking at the 5 minute, right, we can see we created this. Again, equal highs are present. Does it need to take those out? No, it does not. Let's go ahead and watch it out. Let's go ahead and watch what happens, right? So we continuously watch this, we create another low, come back up into this area, actually go back into our area of supply, and then this is where it gets interesting, right? If you were stopped out on this trade after break evening, once this low was taken out right here, that's completely fine, right? We can still watch for that same exact thing. What did we have? This area of supply up here. Did we come and mitigate that? No, not from this candle before that candle that broke structure, but we do have a drop-based drop that was shown on this move right here. So instead of this supply being created right here, we have the lower time frame LPSY, right? That redistribution that was shown right here. We came up into that area, mitigated that area, and then broke structure to the downside. This is the displacement candle that had left that imbalance. You now have your next area of supply. So this was your IC creation, right? Your institutional candle creation, mitigation, liquidation, and then your supply sponsorship within this move right here. So even if you didn't catch this full move, or you got break even right after price came up into these highs, we talked about how you could have placed your stops over at this high. Completely fine, right? This is for those who want to snipe these trades just like this. We're going to have to do a little bit more waiting, and this is why we talk about low win rate, high R&R. Low win rate, right? We are stopped out of this trade. Break even after, let's just bring this back, bring this up. Right? I break even after a 4-to-1 on a 1 minute chart within 3 minutes, right? This is why I like these, because now I have a 3-to-1 on my trim for my break even trim. I can put my break even there, set that. I just made a 3-to-1 in 3 minutes. I'm good to go. If it takes me out, it takes me out. If it doesn't, I run to 100 plus R, right? So let's go ahead and take a look right here. Came down to these areas, broke this. We have this displacement as well. We talked about this area of supply, so we now have our next entry after our first entry was stopped out at break even after a 3-2-1. Or if it was stopped out, it was stopped out, right? -1, so you end up getting a 2R. And again, same scenario. Maybe larger stops this time, completely fine. Still targeting that area lower. right? It's still creating lows. Hasn't broke structure upside with displacement. Nothing that is showing me that it wants to continue to the upside. So again, let's play it out from here now. See what happens. We come up into these highs right here. We're still holding this high that had caused this low. Let's play out a few more. We create another low right here. Looking for the continuation at this point in time. It looks like it's still trying to come up and manipulate highs, which it definitely could, right? Let's go ahead and play this out. Still watch it. Still watch what's happening. See if we are taken out. We end up getting taken out of this trade right here, right? Where would we break even? Where am I break evening, and why am I break evening so quickly, right? So as this setup comes to play, once you get that break of structure to the downside, right, with that displacement that we were looking for, we're looking to break even after that next week low or that next high is taken out on your specific time frame that you are entering on. I break even after I got this displacement to the downside. Price comes back up, week low right here. I don't have the full narrative yet because it hasn't broke structure overall, right? If we go to higher time frames, it has not broke structure overall from these lows, right, that had caused these highs. Right now, it is just mitigating these areas and taking highs, which is completely fine, right? We're still looking for that introduction to continuously take this to the downside. As long as we hold this high that caused this low, we can still see that continuation to the downside. So let's say you take a, what is this? 120 minus 1 right here. Obviously, you're still doing that 1%, or 0.5 to 1%, whatever it is, right? So let's go ahead and play this out now. We end up rating those highs one more time. Let's still watch this, right? We're still holding our area of supply that had caused the new low overall, this area of redistribution. Let's play it out. We break structure to the downside right here on the minute time frame. Right, there's your structure break to the downside. I have my next area for price to come back into. To take that trade, we come back into this right here, right? And this is where we could have looked to possibly take this to the downside one more time. So now that I'm taken out of my trade right here, -1 +2, or sorry, +4 right there. So roughly +3 right now. Let's go ahead and take a short here. Again, targeting that same exact narrative. Just put it out like this. See what happens as we come into these areas, right? If we continue to the upside and take out more highs, which is completely fine, we end up doing that, right? Where's that displacement? Not present yet. Let's go on our higher time frames. All right, we are still rating highs. We still have buy-side liquidity that is presented. We still have that area of supply, that area of fair value. If I'm looking for my candle before that candle that broke structure to the downside, instead of this fair value gap, I'm looking at areas right here for my actual supply, right? My imbalance lies right here. My supply lies within these areas. So I understand that we could create supply within the imbalance, or we could come up to the supply and then continue to the downside from there. So let's just play this out, watch the structure, see if it shows me that same exact thing. What does it do? It raids more highs. All right, so let's play this out. All right, we get a displacement candle to the downside after it rated more highs. Where was our area of supply that we had marked in the beginning? Right, we can see how that narrative comes to play now. So all of these were early shorts, early shorts, early shorts, early shorts, right, coming up into these areas. Now let's go ahead and watch this candle after we had rated that high and mitigated this institutional candle that caused this break of structure to the downside. We're looking for a displacement, right? Break of structure to the downside. We end up coming up into this area of fair value. All right, let's play out a few more candles. Still continuing to the upside. I need a large break of structure, right, with displacement. Here we go. We get a break of structure. Let me play one more candle if it will allow me to. That was not displacement. All right, we're still coming up higher. Still rating highs. Let's go to our higher time frames. In the 5-minute time frame right now, we can see that we're still rating highs. All right, we can play out another candle. We see that displacement to the downside. Let's go back to the minute chart. Right? This was, oh, okay, let's go back. Back to the minute chart, right? As we came up into these areas of supply, is that okay that this was rated, right? Is that okay that these highs were rated? Yes, it was completely fine. Did we close over these highs with displacement? Did we break structure? No, we did not, right? This is where I start the back test, is where I start to get into scenarios where I want to be wrong, because I want to understand how price is actually moving. I want to understand how I can get into these trades and be safe, right? So let's see, right? We took the highs right there. And then we're looking for now that break of structure to the downside from the low that had caused that move up into those highs. So if we draw this out right here, if we break that, we can look for the candle before that candle that caused that and then take that to the downside from there. So we break that to the downside right here. We have that candle before candle that is now presented within this move right here, right? And we now have an area to possibly take this off of. We can see that this candle comes right back into that after. Let's just play this out. And we get more moves to the downside following. Played out a couple more candles, right? We're getting more breaks of structures to the downside. We can see now this low has been taken out on this move here. We can go back to our higher time frames, see how this is showing, right? How this is starting to come to play. Similar scenario, right? We got our closure right here. We have an area of imbalance, area of supply as well. From this institutional candle that has been formed right here. Drawing this out like this. Let's watch if we can return up into those areas that sponsored that move to the downside, right? We fill that imbalance that we had just shown right there. If it's on a 3-minute time frame, you can see it more clear, right? From your 3-minute break of structure to the downside. This is why I like to go to the higher time frames before I run to the lower time frames, because then obviously we'll get into situations where you're just on the 1 minute trying to call something over and over again, and it just does not come to play, right? It just does not show up overall. So now that you have rated the highs, broke structure to the downside, you have your candle before that candle that ended up doing that, right, with the displacement that we can see in form right here. Again, you can take this trade to the downside. Same exact scenario, same exact narrative. Let's go ahead and see how that occurs, right? If we continuously raid highs or we just continue to the downside at this point in time. Now I get another displacement to the downside. If we still hold this low that caused this high, we could still see a possible move higher into this area of supply overall. But remember, we're looking for the creation of supply. So I'm looking at an accumulation to then distribution. All right, let's draw this out. Let's bring this down. Let's watch this play out. Let's just play it out. Right, we're starting to break lower now, coming into this area of demand. Right, we mitigate that area of demand, start to move higher. Here is your supply introduction right here. Let's go ahead and play it out. We mitigate that area of supply, start to move higher. We're still within this range right now. As long as we hold this high that caused the low, right, we can still see that continuation to the downside. Right now, it's just mitigating supply, creating more supply. Right, so let's watch what happens here. Could we end up rating the highs? Yes, we completely could and come into this area of supply. Let's just watch this out, see how this plays out. See if we can get into any trades like this. But at this point in time, right, remember, we were break even after this low was taken out right here. So if this was your 3-minute entry, if you took a 3-minute entry, right, you're sitting at a 2-to-1, 3-to-1 on this move to the downside right here. Completely fine, right? Break even after that, and or still hold with your stops at this high right here, at this area of supply. Now that you have taken that 2-to-1 or that 3-to-1, right? We still have to come back, mitigate that area of supply, create more supply. So let's just watch this out now as it's going. We start to move higher within the range. Then we see a break of structure to the downside. We're still making lows. We're starting to move higher, right? We could see this as a possible reaccumulation within these areas. Right now, the price action seems super choppy, right? So what is this doing? Probably getting a lot of people into longs. We could come up, raid the buy side liquidity that we have shown before, and then actually make that move to the downside. But we're still playing the structure, playing how it is setting up, and then we could see that move. So let's go ahead and play it out again. It comes up into that area of supply that we had mentioned right here, and then we see our break of structure to the downside. So now that you have been break even and or stopped out on that trade right here, let's understand how we could have gotten into that trade after that supply was mitigated from this high right here, where we could have taken it and where we could have taken this to the downside. So obviously we know that the entire area of consolidation is the area of supply. So if I get scenarios like this where I'm wicked out of my trade, or sorry, my area is wicked up just like this, and then we get a bearish engulfing or something similar, right? Then I'm completely fine with still validating that area, because we come up into these areas, we absorb right? That supply that was there, and then we create more supply on that move to the downside right there. So if we go back to the 1 minute after we came up into those areas, up into those highs, go back to replay mode. Sorry, we'll just bring this back up into these areas right here where we could have gotten into this trade where that actual supply was introduced. All right, we see the move up into the highs. We see the buy side liquidity being taken out. I'm looking for a low that caused a high to be broken to the downside and then looking for the supply from that, right? So we can look for either the range break or look for areas right here after a bearish engulfing. So let's play it out. We get that break of structure to the downside right here. I have an area of imbalance as well as this candle right here. If price can come up into this area, mitigate that, continue to the downside or not, right? If it breaks structure. Again, looking at our higher time frames, right? Your candle before that displacement candle that broke structure to the downside lies here, as well as an imbalance. So I look at these areas as possible areas. I don't need it to respect my zone as long as it is still showing the behavior that I'm looking for, right? We have an area of imbalance, and then we have this institutional candle as well. So one, you could look for something like this, right? Stops over the highs, and then continuation to the downside overall. Unfortunately, I can't show the seconds charts where I ended up actually getting into this, but holding this all the way to the downside, looking for something similar. It is still showing that bearish behavior overall, so let's play this out. See if we can get tapped in from this fair value gap that is created. If not, right, then we can still see that continuation to the downside. So we see this continuation to the downside. Where am I going to look for my next possible area, right? My next possible trade. Well, now that you have a 15-minute break of structure, you now have a 15-minute, right, area of fair value for price to come up into. And if it does, then you can look to take that, right, on that 5-minute break of structure to the downside, that supply creation that we have in place. But let's just go ahead and play this out, see what happens if we end up creating more supply or not, right? So we see this break of structure to the downside right here. This is where I'm most interested. Why? We have our first area of supply. We're still looking for continuation. Where's the next area of supply? Break a structure to the downside, right? This was that candle that had caused that. Sorry, this was the demand right here. We can see same exact scenario. That's demand, right, actually created this area of fair value. If we go on the lower time frames, again, that candle before that candle came up and mitigated that area of fair value. You get into a short position right here, again targeting those areas lower. Let's see if this zone gets respected, and let's see if we can continue to the downside following. We start to make lower lows, lower highs. We're creating a lot of buy side liquidity coming into this area of demand, right? And then we actually start to break lower. We break structure on the 1 minute right here, and then we start to move lower. How are we moving lower overall? Why is this happening? Why was I not able to get into my trade at this point in time? We have the mitigation, right, of our institutional candle, of our areas of supply. We're looking for our next area we could possibly get into after this raid to the upside, after this move to the upside. Where's my next area of supply, right? Why am I still stuck on these? So let's go ahead and look at it. Where's your next supply introduction? Well, we had this first break of structure to the downside right here. Where's that double MB? Where's that introduction of that supply? Where's the low that it created? Right here. Where's your next area of supply? Candle before that candle that did that. So now you have your M in place, right? Your market maker M. Now you are able to get into your trade, again, still following the continuation. Why? Because we're still creating lower lows, lower highs. We make another lower low, come back up into that supply, continue to the downside, make another lower low, come up into that supply, continue to the downside, right? Until I am proven wrong as far as breaks of structures upside, then I'm not looking for that move to the upside. So now we have an entry, and we can target, right, that structural narrative to the downside down below here. So let's go ahead and play this out. All right, let's just bring this over here. Apologies. Put this up and play this out. And then once this plays out, I'm going to go ahead and end it for tonight. Is there any questions or anything that anybody has? I'm going to go ahead and check stream chat right now, as well as crypto chat. I don't see any ads or anything like that, so we are completely fine as far as that goes. But again, we will be targeting that entire narrative. If anyone wants to ask a question and is muted, feel free to ask me now. If not, go ahead and unmute yourself and ask, and we can get that covered. But again, I'm looking for that move to the downside right here. Then once you are able to get into that trade, right, stops over that high of that supply zone, we can see we came up and mitigated that supply zone just right there. Let's go ahead and play this out now that we have taken out more lows. Where is this going to end up going to? Right, comes back up into that area of supply, makes more lows, breaks structure to the downside, starts to come up higher, right, and then we still see that structure break to the downside. So all of this is just liquidity, right, from dumb money trying to get into longs, right? Trying to continuously take this to the upside. What happens, right? Maybe they're looking at this and saying, again, higher low, right? Continuation to the downside. We see that happen over and over again. Now on a 4 hour, I have another zone of supply price could come back into, mitigate, and continue to the downside. But right now, we had caught the entry within the introduction of that supply overall, right? So we could still come up, mitigate that, continue to the downside. Let's see what we do. Just go on a higher time frame. Right? What did we do? We raid highs, create more, break structure to the downside, mitigate the candle before the candle that had done that, and then from that, we are still looking for a continuation into areas of demand. Then play it out some more. We get a redistribution, another accumulation to distribution, more supply that is being formed. Taking out the highs, breaking structure to the downside, more supply that is being formed. And then you get that full move into those areas of demand lower. I think we raid some lows right here. We're still looking for that area of demand. We could come up into supply and then continue to those areas of demand overall. But now that you're looking at this trade like this, right, you take your take profits either at this area of demand and or within this imbalance that we had seen from this move to the upside. Right now, I don't know if it has mitigated that or not. We can just play it out and see. Yep, ended up mitigating that area of demand. Right, your 122 to 1 is done. I took, what, 3 losses, and that was, no, 2 losses up into these areas. We had a -1, another -1, and then we had a +4, and then we had a, +4 that got break even, -1, -1 within this area as well, so that's a 2, and then you have your 122 to 1. So if you want to take your 2 -1s, right, take that to the 121 to 1, you now have a 1 to 120. Obviously, it's not going to be a whole 120 to 1 because we are going to be taking profits at certain areas, right? So I usually like to have that, looking at something like a 62 to 1 within these areas, right, once we had tapped into here. But allowing yourself to watch the structure, watch it as it's forming, and get into certain instances where you either get stopped out or you are wrong, but you're still seeing the same behavior, right? We can still get into those trades and we can still trust our narrative, trust our plan based off of what it has given us. Was I wrong just because, or was my style of analysis, my candle before candle, right, creation of supply after liquidation, was that wrong? No, it was not, right? Obviously, it was wrong timing because we weren't either noticing one thing, right? I could go on the higher time frames and say, oh, well, my 15-minute actually broke structure to the upside right here. So I should have waited for that to occur first before I even got into this trade, right? Obviously, we needed to do that. So we saw this reaccumulation right here. We saw that breakdown, right? And then we saw the supply that was created within that reaccumulation right there. So within this time, when I took those -1s, I was on the 1-minute chart. I should not have been on the 1-minute chart. I should have waited for that 15-minute structure to break, right? There are certain scenarios where we get into those just like that, right? But with that being said, that was pretty much all I had for everybody today. Just trust yourself, trust your plan. You know it works, right? This is a math game. That's why stop losses are there. You do not need to be right. You do not need to show everybody that you caught a top or caught a bottom, because what does that matter if you risked barely nothing, right? And you made less than 1% of your port on that, but you caught the top, right? What does that matter? It does not. We want something that is consistent. We want something that is profitable, and we want something that we can sit down and on the charts every single day, get that done, right? Walk away, and then come back and do it again the next day. But again, like I said, thank you everybody for popping out. Thank you guys for sitting here listening to me ramble, sitting here listening to me backtest. We talked about ETH and Bitcoin. Let me just go ahead and take a look at them, see what's going on with them right now. I do like how this is starting to set up. We came into this area of imbalance. We just showed a 15-minute structure break to the upside. We are exhausting supply, it actually looks like. So I'm going to watch this behavior within here. Maybe we'll use this area as an area of demand as we have violated these lows right here. We could still possibly come into this area of demand, continue to the upside. Right now I'm just going to be waiting for structure, waiting for some type of impulse. Let's go ahead and put out the volume. See how we're doing. Yeah, not really much volume within the market right now. I'm going to be waiting for that to come to play. Once it comes to play, like I was saying before, I'll be posting entries and exits. I do want this area higher within supply before we get that full continuation to then the downside to those lows that we have mentioned before. But again, like I said, thank you everybody for popping out. Thank you guys for sitting here again, listening to me ramble. I hope you guys have a great rest of your day or night. And with that being said, I'm going to go ahead and get out. Peace, peace. Thank you all.